Good morning, everyone, and happy Tuesday. The market is not doing too much this morning. Of course, this week, and especially today, will be one of the most important weeks of the entire year, considering where the market is at right now and the companies we have reporting after close today and throughout the rest of the week. It's so important and crazy, and Tom, we are set for a lot of volatility this week, and I know we've been saying this for a couple days now, but if these giant powerhouse companies like Apple, Microsoft, Amazon, and Google fall off like Facebook and Netflix have been, that is not good.
Yeah, it's not going to be good at all, and we'll see the SPY and the NASDAQ probably rip to the downside, just like they have been over the past few weeks, to be honest. So hopefully this doesn't happen, but you're right. Those are some big reports coming up there, Mike. Tonight, after close, we're going to have Microsoft and Google. And looking at it right now, Mike, Microsoft's kind of dipping back down here ahead of earnings. I'm curious to see where this one's going to end up today. As of market open, though, it's pointing to the downside. Looks like Goog is also starting to fall off. Same with GOOGL, just their other class of shares. But yeah, it's definitely interesting, Mike. These stocks are not doing the best ahead of earnings. And Tesla did okay, but even though they did good with earnings, they gave the gains right back, and they even went lower as of pre-market yesterday. So I'm a little bit worried about some of these bigger tech stocks. I feel like it's going to kind of be like the last earnings season, Mike, where even the stocks that do good, kind of like how Enphase had a great report last time, I feel like even though they did well, they gave those gains back, and I feel like we're kind of seeing that happen, this earnings season as well.
Gotcha. All right, so looking at my watch list today, Tom, it's definitely mostly red right now, but some stocks are just barely red. For example, like Tesla's down, what is that, like it was 0.3%, but now it's fallen a little bit more. We have like Facebook going red and green, so it looks more of like a slightly red day, but I feel like it can easily turn around because it's not too red.
Yeah, it definitely can. The price action isn't too crazy yet. I will say Facebook doesn't look bad. I know you mentioned them, and I threw them up on the chart. At least they have some nice green candles compared to some of these other stocks that are really not moving much at all. Mike, I know that Raytheon reported earnings this morning, and they're actually moving a little bit lower, and this was another one of those defense stocks, and I think people were kind of hoping that this one would pop back up with all of like the Ukraine and Russia news and everything like that going on. These stocks have been kind of ripping, but they kind of had an underwhelming earnings report here. So we'll have to see how the other defense stocks end up doing as they report over the next couple of weeks too.
Yeah, very true. How is Lockheed Martin doing again? I just want to check it out. Yeah, so not too bad. Right.
Yeah, it's holding up, especially it's holding up extremely well compared to the move that RTX had. So I'll take it for Lockheed. It might end up going a little bit lower today, but even if we look at Lockheed on the max daily, it's still fairly close to the high. I mean, it did pull back quite a bit, but, these defense stocks did get pretty overextended. And, Lockheed did also have like a higher or a lower high up here, which is not good to see. That's a pretty bad technical setup too. So I'm not too surprised to see him coming down and retesting some of these supports.
Gotcha. All right, we're also seeing VXX creep up there, Tom, as the market's just falling just a little bit. VXX is up around 3% today. It's recovering from the drop it had yesterday, but let me actually check something really quickly. Yeah, okay, it makes sense because I was checking the VIX index to, just make sure that was moving up because I remember, like, what was it, like maybe a month or two ago, like the VIX index and like VIX futures were tanking, but yeah, VXX shares were popping, and that was a different story, but still, I mean, it is moving up.
Yeah, that was insane. I think it actually happened twice back then, Mike. I couldn't believe that we saw that happen, and I was like, wow, that's pretty telling. But yeah, you always got to check the VIX after that, because I remember that one day, Mike, I was expecting to see the market falling off the table into oblivion, but it wasn't. It was just the VXX having that short squeeze or whatever it was that Barclays did. I remember they definitely played a role in it. But yeah, I mean, it's definitely interesting, Mike. It's flying up. It's already up 2.9%, and who knows if we even retest like 2630 or 2650 from yesterday, this will end up being up quite a good percentage here. So hopefully we continue to see that type of movement. Although, Mike, I would rather the VIX go down and the market go up. But, if we do have to play the VIX, then we have to. But, You know what I'm saying? I'd rather see all the stocks in the market start to come up rather than go down.
Yeah, I hope VIX tanks down, Tom.
Yeah,
Oh
me too,
gosh.
man. We need it.
Yeah, no doubt. Let's see. I just want to look through the SPY really quickly. Just want to see something. Yeah, so the SPY is selling off a little bit right now. You see how IV's also popping on the SPY, so that's interesting. Normally that's a bearish sign, but we'll see what happens. This can also happen in earnings seasons like we have now. For example, like when we have the giant companies that are set to report earnings, clearly they're going to be volatile and they're going to move the market. Doesn't mean to the upside or the downside, but they're going to be volatile, and that'll also make the S&P 500 volatile. So just because we see IV popping right now isn't necessarily a bearish signal in this instance because of earnings.
Yeah, that makes a lot of sense. A lot of big companies did even report this morning. Like, I was just eyeing some up, like Raytheon and Pepsi and stocks like that. They all reported, and none of them are really moving up in a huge way. So I could definitely see that affecting the market in some type of way. And yeah, it's coming back down today, Mike. The SPY is honestly like right on a pretty good support at like 425. That's been a pretty good intraday level the past couple days. It looks like it looks like, in my opinion, though, we might end up falling even lower. And if that does happen, the next major support intraday I'm eyeing up is down here around 422. I think that's going to be a pretty big level here, Mike. We've had lots of bounces there the past few days, and of course, anywhere from like 420 to 422, I feel like we've just had a lot of volatility.
Alrighty. So we have Alex saying any good support levels to look for AMD for a put day trade. Tom, AMD's breaking down. What are you seeing?
Yeah, they are falling down in a big way, Mike. This was actually my free day trade. I had it if they popped above 91.50, get some calls. If they fell below 89, scalp some puts. So right now it just fell below that big support level of 89 that I was looking for. There was even some smaller support there, right around like 88.70. So now that we're falling below that support, I'm really going to be eyeing up 88, Mike. There was a lot of movement there intraday yesterday. 87 we hit in pre-market yesterday with AMD, but I will say though, below 87, we're going into territory that we haven't been at in a long time. So as far as a huge support I'm seeing, Mike, $80 even seems like the biggest level to me, but there's definitely a lot of other levels sprinkled in. Like I said, we're falling off into territory we haven't been to in a while, but I will say, Mike, that's definitely selling off today in a pretty bad way, and I'd hate to see it keep falling down like this.
Yep. Alrighty. How's Nvidia holding up?
Man, I hope better than this. Let's see. Yeah, not better at all. Kind of like you would expect. They're also falling off to the downside. One thing I really don't like with Nvidia, Mike, I know he was asking for supports on AMD, but Nvidia just hit off a big resistance. They ran right back up to $200, which they recently broke below, and they got rejected right off of there again. So that's not a good sign. Hopefully they can get back up above 200. Maybe if some of these earnings go better than worse, but man, this is definitely bad movement today out of these chip stocks, and I'm sure this is part of the reason why the market's pulling back too.
Yep. Yeah, that's actually a good point. Yeah, because let me pull something up. It looks like Nvidia has a decent weighting in the S&P 500. Like, of course, it's nothing like Apple or anything like that, but both Nvidia and AMD have a decent influence, so that would make sense. Of course, I'm trying to pull up the heat map on Thinkorswim, but it's lagging as usual. So
yeah, of course, right? Thinkorswim has been a little bit laggy lately, Mike. I don't know what's been going on. For me, it's been pretty good, but it has been lagging every once in a while. So I guess there is some maybe some issues, maybe with like the increased volatility. There's like more people on the servers or something.
True. Alrighty. Let's see. So I'm gonna go through a couple different scans right now. Of course, we already talked about AMD and Nvidia. It looks like Facebook's also trading a little bit lower. Yeah, Facebook and Tesla they have like negative momentum right now, but it's not like, in my opinion, it's nothing too alarming this second. That can change, but like for example, Tesla's down around 1%. It's not really too much for a company like Tesla, and like it's just kind of holding up. So I guess we'll see what happens.
And that really could turn around, like kind of like look on the chart here from last Friday. Tesla had some pretty bad red candles to start the day, and then they ended up rocketing right back up over the next couple hours. So that could definitely turn back around, Mike. So you're definitely right there. Even big stocks like Apple are down, like you said, only 1%, but they are down today, and it is kind of dragging the SPY a little bit lower too. I don't think that the SPY is necessarily down too much either. Like, I think this one could also turn around intraday if we saw the other stocks start to move up as well. But yeah, I mean, it's just crazy, Mike. The SPY is starting to, at least today, pull back very slightly here. And we even have GLD starting to pop back up, which is nice. I know GLD gave back a lot of its gains yesterday, so I'm glad to see it coming back today in a good way, back up towards 180.
All right, there we go. Let's see. All right. I'm just trying to find some like big movers today. You know what I mean? Like we already talked about some of these bigger companies, but I'm trying to find something that like is actually breaking out. Are you seeing anything?
Some of these oil plays aren't looking too bad here. Like Oxy's coming back up. I know yesterday Oxy sold off in a huge way, all the way down to 51.50 intraday. Now they're back up to 56 today, and they are moving up above this resistance from yesterday, right around 55.25. So it's cool to see them breaking out. The breakout could definitely be a little bit better though. So maybe intraday, who knows, they'll start to break out even higher. But I will say crude oil itself is straddling right around $100. So this might make for some good plays here with some of these oil stocks. So could end up being pretty volatile as we go today, Mike. There's lots of news coming out, and who knows if even more news comes out with Russia or something like that, it could definitely affect the oil markets here. But yeah, I mean, so far today, my watch list doesn't have too many movers to the upside. The main thing I'm seeing with momentum, Mike, is down. And once again, we have Roblox breaking lows, down 5% here. Roku down another 5.8% as well. The momentum so far today is definitely to the downside. The stock leading me up on my watch list is DWAC. It's up 6.6%. And then the next highest is Oxy, and it's only up 1.7%. So at least on my watch list, not too many movers today.
Jeez, Tom, Roblox. Holy crap.
Yeah, I don't know what's happening with these guys, Mike. Like, they seemed like they were having some good momentum, and I even saw some good news with Roblox this morning where they're going to have a performance by Lizzo on there, apparently. So that's going to be cool to see. Oh, yeah, here's the article on Thinkorswim. So you can see that they are going to have like a thing on Saturday, April 30th, where they're going to have some performances all throughout that weekend. So it's definitely going to be interesting, Mike. I know Logitech is also mentioned in this, which is why I initially heard about it. But either way, I mean, it's definitely interesting for Roblox, but their stock doesn't like it, that's for sure. Making new yearly lows here.
Wow. Tom, Roblox from November 22nd to today, it went from 141 down to 33, basically. Holy crap. That's that's just crazy. Yeah, IV's popping up too. Do you have the dashboard pulled up, Tom? Because we could pull up some of the fundamentals with it.
Yeah, I do actually, and I believe their fundamentals aren't the worst, believe it or not. I mean, obviously their net income isn't going in the best direction, but their revenue's been exploding, and look at the quarterly data. It's actually pretty good.
Yeah, like I remember we looked at this, I think either last week or the week before, and I was like pleasantly surprised by their fundamentals. I know that they had a very aggressive valuation for a while, and we'll talk about that in a second. But just like looking at the revenue for a second, Tom already has pulled up on the quarterly from Q4 of 2019 to the most recent quarter, which is Q4 of 2021. They went from a revenue of 138 million to 569 million. Like, that is insane growth in just you know what I mean? Like it's not like we're talking about 10 years here. We're talking about Q4 2019 to Q4 2021. 138 million up to 569 million. And if I look at it on an annualized way, they don't have a ton of data because they recently IPO'd, but they went from 2018 annual revenue 312 million to 2021 annual revenue of 1.9 billion dollars. That's insane.
That really is insane, especially for just I hate to say it, but just for a small gaming company like Roblox was in the beginning. As we know, Mike, they have been growing a ton over the past, 10 to 20 years? Like, this company has been around for a long time. I remember playing Roblox back whenever I was 9 years old, Mike. Yeah, so I know they've been around for a while, and Man, it's cool to see that they've been growing like this, especially on the dashboard with their revenue and everything. And their price to sales, Mike, is 9.9, which is a little high, but hey, I'll take it compared to what it was like a few months ago. That's for sure. It's definitely been coming back down a little bit along with their valuation there. But yeah, it's cool to see this stock doing so well. And even the quarterly data, Mike, it's not slowing down. If we report good numbers on this quarter, I think we could end up seeing a pretty good move out of Roblox, hopefully back to the upside after all this selling pressure. But, Mike, I did want to mention really quick, Roblox keeps selling off here, and it's one of the better fundamental growth stocks that we've been finding. And, of course, they probably have some issues, of course, just like everybody else does. But fundamentally, from what we've seen out of most growth companies, it looks pretty good along with Zoom. And unfortunately, these two companies are two of the ones that keep selling off in the most drastic ways, even though it seems like, they're two of the better ones, believe it or not.
Yeah. So I'm just looking at these Roblox fundamentals a little bit more. What I do like is that the industry that they're in, I'm someone who strongly believes in the gaming industry as a whole, so I believe that Roblox will continue to do well, not only just because they're in the gaming industry, but for other reasons. I know they also have like metaverse potential and all that stuff. Now, you're probably wondering why the stock's falling, and it appears that the main thing is just that it was just overvalued like so many other companies were, and that's why we saw so much selling pressure over the past couple months, not only with growth stocks, but even some of these like powerhouse tech companies, whether we're looking at Amazon or even Facebook or anything else, you know what I mean? Like, it's been a tough couple months for many stocks out there, and a lot of it has to do with valuations.
Yeah, it does. And then also, Mike, we have the valuations coming into play, and then we have the Feds now raising interest rates, which are going to hurt those valuations as well, because as we know, it's going to cost people more to borrow and different things like that. So it's definitely starting to weigh on the market, just all these big factors. And as we know, the big tech stocks are starting to tumble off. And I will say, Mike, there was a lot of analysts that were warning that we might see a tumble as the Feds started raising rates. And then also, they were just forecasting that the market just rose too much also from COVID. There was too much upwards momentum throughout that easy market that the Feds had made there for a couple of years. And it just created too much upwards momentum. You have to have some selling pressure eventually. And I feel like we're just seeing that happen now. And like you said, Mike, those valuations are coming back to reality, which is another big reason. I'm sure a lot of institutions they feel a lot safer selling off their shares when they're seeing, crazy price to sales ratios like we were seeing before some of these big drops, Mike. Yeah. I'm sure some of their, I guess some of their advisors, you could say, were probably like, hey guys, you guys might want to trim some positions here. And I'm sure it just triggered like a massive type of sell-off, especially on a year where the Feds are going to be really hawkish. It's just kind of a crazy move to the downside that was somewhat expected, but I don't think anyone expected moves like this out of Facebook or like a move like Netflix. Maybe they were expecting like little 20% pullbacks or something, but man, the way that some of these stocks are down like 50-60% are just insane.
Yeah. I think Netflix is down around 71% from its high, if my math is correct.
Let's see. Yeah, somewhere really close. Yeah, right around 71%, Mike. That's a huge drop. And I'll be honest, they're coming up on a big support around 200. I'm kind of curious how they play around there.
Yeah, I would think that they'd be able to hold somewhere around this level, but no one can catch the bottom. So I guess we'll see. But on a different note, I checked some of the scanners again, and it looks like we are seeing some upwards movement, and that's with Pfizer. This one's up around 2.5% today. It's bouncing off a pretty decent support, and it is moving in a pretty good way.
Yeah, that one actually climbed up to second on my watch list while we were talking too. So yeah, it's definitely breaking out, Mike. And I'm curious if this is moving up on some type of news. I'm going to check the Thinkorswim news tab really quick here. It does look like they have a lot of news that came in this morning, but I'm not too sure exactly what's going on. It looks like there's something with some COVID-19 patents or something like that, but I don't think it has anything really to do with Pfizer. So I'll have to look into this one a little bit, but either way, I mean, it's moving up in a big way. And I will say, Mike, it's breaking out pretty good. It just ran up above $50, which I thought would have been a bit of an intraday resistance, but it just blasted right through there. hopefully it doesn't get rejected at like $50.30 where it kind of did the other day.
Alrighty. Then we have Jerry saying, I can't believe Baba is where it's at. Yeah, it's mind blowing. You know, Alibaba at, I guess you could say $86 and just like a little over a year and a half ago, but they were at 320. So that thing just lost so much value as well. And if you believe their fundamentals, they are at a good level. They're at a good valuation. If you believe that they're reporting the true numbers and you're okay with the risk that comes with China stocks, you know, like they fell so much. Their fundamentals are pretty good, but it just depends if you believe the numbers and if you're okay with the unique risk in owning a China stock.
And I'll tell you, if you're somebody who owns a lot of positions in, like, let's say, bigger U.S. companies, you know, maybe like if you own like a lot of Apple and Microsoft and stuff like that, it might not be bad to, you know, maybe take a small position on Baba. You know, it's kind of tempting down here, Mike. It's pretty low, like you said, on the valuation. And while they've been falling, I feel like it's mainly just on bad news with China rather than company-specific news. You know, like their revenue and stuff has been holding up pretty well, and personally, I think their numbers look pretty good. So as far as you know, the next couple of years, I hope Baba recovers. It's just the main thing is just that China risk you mentioned. You know, like we never know what they're gonna do, if they're gonna go after Taiwan or if they're gonna start to investigate these companies harder like they were in the past, or anything. You know, there's all types of stuff. Even Baba's CEO Jack Ma went missing. I remember that really blew my mind whenever that happened, and I never thought that could even really, you know, even happen. And I know it might not have even been the government's fault, but still, I mean, the way he was gone for so long and stuff, that just shows like the type of like uncertainty that some of these companies go through. And man, I hope Baba recovers, Mike. It's at a great level, and I'm really tempted to grab some down here. I'll tell you that, because if it does recover, I mean, I would think they could do pretty well over the next few years if as long as the tech sector holds up.
Yep. And then another thing I'm curious about is how the lockdowns are like super hardcore in China right now. I'm curious. I mean, I would imagine that it's affecting Alibaba. You know, I just wonder by how much, and we'll find out with their earnings.
Yeah, you would definitely think so, but at the same time, you might think that would help them almost.
True.
You know, I know that a lot of tech companies like, well, you know, I guess Amazon didn't do the best, you know, throughout COVID here. So maybe it's not the best thing, but I know like shipping and receiving exploded. So I know Baba does a lot of stuff like shipping things to people's households and stuff like that. So maybe they'll, you know, do better, but you're definitely right, Mike. That looks like that's been hurting them at least a little bit over the past, you know, year.
Yeah, so I guess we'll see. But yeah, the stock has been all over the place. Let's see. So with the next comment, we have Jay Deep saying the U.S. is expanding access to oral antiviral treatments against COVID, such as Pfizer's Paxlovid, by doubling the number of locations where they are available, the White House said Tuesday. So great information there. Perfect. Yeah, Tom has it pulled up too. So that would definitely make sense why Pfizer is running up. So nice job, Jay Deep, with that info. What else, Tom? It said MRK is also involved with this news. Let's see. Yeah,
it looks like they're actually having a pretty good week so far, too.
Yeah, exactly. So Pfizer and MRK appear to be moving off of this news. It does look like Pfizer is benefiting more, though.
Yeah, Pfizer seems like it's really breaking out here today, Mike. It's having a really good move. You know, it might not continue up all day like this, of course, because you know, no stock can have this type of movement all day. I mean, we've seen it before, but I doubt we're going to see it. But yeah, MRK is definitely pulling back a little bit here. It's not up as much, only up 0.36%, whereas Pfizer's up like 2.2%. So yeah, that's the difference there. But yeah, Pfizer looks pretty good today, Mike. And, you know, that's good news. You know, I hope that the government does whatever makes them feel safest. You know, if they can somehow put out some type of drug or pill or whatever it is, and then they can start getting back to normal, then whatever it takes. You know, I hope that they get back to normal sooner rather than later. I know most stuff, Mike, is back to normal for the most part, at least where I live. So that's good news at least. But yeah, Pfizer's popping up, and I know like CVS Pharmacy is up in the green today too. It's definitely not exploding or anything by any means, but it's definitely interesting to see them moving up on a day where we have a lot of stocks in the red. It looks like Walgreens is trying to come up too.
Yeah, and then remember that you don't need masks on airlines now too.
Oh yeah, that's huge, Mike. I forgot about that. And talking about the airlines, they're kind of pulling back this week, but last week was really big for them. There was a lot of good earnings that came out, and a lot of them exploded. But yeah, they're pulling back today, and that's big news, Mike. I forgot about that. You don't need masks on airlines. I actually had to go to the doctor like a few days ago, and I remember whenever I went there, I still had to have a mask for that at least. But that makes more sense than I guess the airlines.
Yep. I hope you're seeing Tesla right now.
Oh man, no, I'm not. Let's see it. Oh no, Mike, this is not a good move here. Wow, we broke below that big support at like 980, and then we also broke below 960. Oh, this is brutal. And man, Tesla had good earnings last week too. So to see him pulling back like this is not good. I wonder if something's going on because they're worried Musk won't, maybe take care of Tesla as much now that he owns Twitter or something.
Yeah, I've been seeing news articles like that. I personally I think it's definitely possible, but I think Musk will figure it out. I really believe that the selling pressure will result from the fact that Musk is probably going to sell some of his shares to finance the Twitter deal. Now I know that I think he had to personally commit around like 20 billion or something like that, and then the remaining buyout money is it's like collateralized by Tesla stock and some of his other assets. But the main thing is these billionaires, whether it's Elon Musk or Bill Gates or Warren Buffett or whoever, it's not like they just have $200 million sitting in the bank. It's most of it through the form of stocks. So when you actually want that money in cash, you got to liquidate the stocks, which brings in selling pressure. And we all know how the market works, Tom, where you have a little bit of selling pressure, and let's say the stock falls 2%, that move can be very, how do I say this? It can be like extrapolated, or it can just be like,
accelerated.
Yes, it can be accelerated by day traders or just other people following, Elon or whatever the case may be to make the move greater than it even should be. And this happens to the upside and the downside. So I personally believe that, that will be more of an influence on Tesla stock falling rather than Elon Musk not being able to dedicate as much time to Tesla. But that's just my opinion.
Yeah, because I think he'll be pretty good with Tesla still. I think he's still going to focus mainly on Tesla, in my opinion. I just think he's going to do some really good oversight with Twitter. For example, he doesn't need to sit there and write all of Twitter's code out. He can just have people do that for him or something, for example. So yep. I feel like he'll still be focusing a lot on Tesla, of course. And I think Tesla is still his baby. It's obviously still valued way higher. So that's another big reason. But yeah, it's falling off big today, Mike. And I will say on the daily chart, I know I've been looking at this blue trend line for a long time now. And recently we've been dipping back below here. And now we're starting to see a pretty accelerated sell-off now that we started breaking below $1,000, which was that big support there. So it's tough, Mike. Tesla's selling off, and in my opinion, it kind of looks like it could go a little bit lower. There's another huge support coming up right around 900 to 890. So we'll have to see what the stock can do, but it looks like for the next couple days, we might see some selling pressure. And I hate to say it, but Twitter's definitely playing a role, at least in the short term.
Yeah. And another thing when it comes to Elon's time management, obviously he runs Tesla, but he also runs SpaceX. He runs the Boring Company. I guess you could say Solar City, but that's kind of hand in hand with Tesla. His AI company, like OpenAI or Neuralink or whatever it is. So he has a lot on his plate, and then that's not even including any of his personal life either. You know what I mean? So I think that he will find. I think he'll be able to manage it just fine, but we will see.
And Mike, I actually see some pretty crazy news here, believe it or not. Look at that. Well, it wasn't crazy. To me, Mike, it was just funny. Look at this. UBS raised Twitter's price target to $54 from $37. Like how much smarter can you get, UBS?
Yeah.
You're raising it to the buyout price, like like how could
Yeah.
you even like man? It's like they're putting this out here like it's a good headline, like they raised Twitter's price target. It's like well no crap, Elon's
Yeah.
buying it for $54 a share. Of course it's gonna get raised to that.
Right. It's like now you put it out, really?
Yeah, it's like you should have put it out back when it was at like 45 or something.
Oh god, that's kind of funny. Oh gosh, I don't even know why they would push that news article out. Like honestly, but whatever.
Yeah, like that should just be something like where they just change it on their books and don't even talk about it. Like,
Oh gosh, Hunter said analysts are garbage for the most part. Yep.
yeah, I mean, man, the way I was seeing some analysts talk lately, it's insane. Like, especially the ones that talk about AMC going to 5,000. I mean, I couldn't even believe I was seeing realistic articles about stuff like that.
Oh my, Jerry said that Deutsche Bank raised it to 54.20 from 30. Like really? Why even? Let's see. I'm sure he did. I mean, it's just I don't even understand why they would at this point. Like maybe to boost their stats or something like that, but it's definitely not very useful at this point.
Yeah, here I see it. Let's see. I pulled it up here. Yeah, Deutsche Bank. Let's see. Deutsche Bank maintains hold on Twitter, raises price target to 54.20. Well, hey, at least they did it right and they raised it to 54.20. UBS only did it to 54. They actually got it wrong a little bit.
Oh gosh. Alrighty. So, dang, I'm just like looking at some of these stocks today, and it looks like another bloody day in the markets, unfortunately.
Yeah, for some reason, these health stocks are really popping up, Mike. I noticed AbbVie's kind of popping up again, which is interesting to see. I know that it's kind of weird to see all these stocks like AbbVie, Pfizer, stocks like that moving. Mike, I was kind of hoping to see Moderna doing a little bit better today with all these other stocks, but they're kind of pulling back off to the downside here. But, man, poor Moderna. Their daily chart's starting to look a little scary.
Yep, no doubt. Let's see. Just looking through some of these other plays really quickly. Yeah, it's just like everything's breaking lower, Tom. I'm looking at Facebook, Nvidia, Snapchat, Netflix, Microsoft. Everything's just tanking.
Man, Facebook's looking pretty rough here. Let's go see Netflix again. NFLX here. Wow, yeah, almost down to $200 even. I wonder if it's going to bounce there today, Mike, or if we're going to blast down below it. It's going to be tough to play here, but who knows? You might be able to scalp that really quickly if you see a good bounce. But I'm pretty worried about this one, Mike. In my opinion, I'd be a little worried of this one falling under 200 with the momentum it's had to the downside. But yeah, I mean, my watch list, Mike, is almost all red, and like almost half my watch list is down over like 3%, which is big. Even Triple M, Mike, one of those safer, slower movers is down with earnings today. Another pretty big move to the downside. Looks like on the max daily, Triple M is down almost to those COVID levels again. So that's not good for them at all. I know they were doing well there because they were making like COVID masks and stuff like that. But man, I guess after that industry died off, man, you can see Triple M is really down actually on the yearly chart. This is definitely not good to see with them. And PayPal's moving lower, Mike. We're seeing a huge accelerated sell-off here. And unfortunately, a lot of these stocks that have been falling are starting to move well below some of these big supports. Like Roblox, like you were mentioning, it's down all the way down to 7.5%, Mike, $32. And that sell-off at market open was pretty rough, but it's continuing.
Yep. All right, so we have Chris saying, what do you think happens to Twitter calls once the deal goes through, or if it expires before the sale close? If stock rises, will calls still drop because the IV? So it really depends. So ultimately, if your calls are in the money and the deal goes through, you would want to exercise those call options. So basically, an example would be, let's say you have the 50 strike call options for January of 2023, and let's say the deal closes and everything goes private before that expiration date. What you would want to do is just exercise those call options. So basically, you would just have 100 shares of Twitter at $50 each, and then like a week or two later, Elon Musk will pay you $54.20 for those. So if they're in the money, they will have real value, and it will likely be a profitable trade depending on where you bought those options for, or for what price you bought them for. That's if they're in the money. Now, Tom, Tom, I actually want to illustrate something pretty cool. So, can you do me a favor and go to the June 17th expiration and the 60 strike call options? This is pretty cool.
You want me to like view it on the chart or like bring up the chain?
The chart.
Okay, so June 17th, 50 strike calls?
60. Yeah, 60 for June.
60, okay, let me get that up here really quick.
Perfect. So this is kind of sad, but so we can see over the past like 4 or 5 days, Twitter stock has been booming to the upside, but these call options got absolutely destroyed, and this is because the IV fell, and this is because no one's gonna pay the right to own 100 or to own Twitter shares at $60 each when they know that Elon Musk is willing to pay them a max of $54.20 each. So there's a lot of variables when it comes to the Twitter call situation. The main thing is if the deal goes through, for the most part, if you're in the money with your call options, you will likely be able to profit, and that's if the deal goes through. Your other scenario, as you said, if the call options expire before the sale close. So that's a different story. So that is just like a short-term trade. Like honestly, if the options are expiring before the deal even goes through, it is 100% dependent on Twitter stock price action. I know some people were chatting about this in Discord the other day, but even though Elon Musk is paying $54.20 for the shares, Twitter in the meantime can trade for $54.10, or it can trade for $45, or it can trade for $30. It can trade for anything. It just depends on what the market is willing to pay for it. So if your options expire before the close, it's just like kind of like a normal trade. But in the meantime, just understand that any out of the money calls that are above $54.20 will basically have no value because the IV tanked because Elon Musk's offer is only at $54.20.
Yeah, but even though like that does happen, Mike, like let's say Tesla stock ends up going, Twitter stock ends up going up to like 60. Now I know it's probably not going to happen, but let's say like by the end of the week it went up to $60. Those calls could still move in the short term, right? It's just mainly when the deal goes through.
Yeah, yes, they can, but it's like almost like that would never happen because the funds would arbitrage it. So, for example, like if they know with 100% certainty that the maximum amount of money that Elon Musk will pay is $54.20 per share, while it is completely possible for Twitter shares to go above that, like they can trade for 60, but it would just like never happen because funds would short it. Like let's say Twitter shares went to 60, right? Hedge funds and even I would just short it at that point, because then what would happen is, let's say the deal goes through. All right, you sold short Twitter shares at $60 each, and then the deal's going to go through and you're going to get $54.20 for them. So you profit in that scenario. Let's say the deal doesn't go through and then Twitter shares tank from 60 down to 45 or 50 or whatever. Then you profit in that scenario. The only scenario where you would lose is if like somehow the deal was canceled and then Elon Musk paid more for it. But that would just like almost, it's so unlikely, and it would almost never happen.
But do you think you could even short shares of Twitter, like if it ran up to 60? Like I'm sure like the hedge funds and stuff would take them all right away. Don't you think?
Yeah. So that's another thing. Like you said, like the hedge funds would take them all away. So check this out, Tom. Like go to like UVXY really quickly. Yeah. Like I've looked into strategies of maybe shorting this and just holding it, but it's not worth the risk for a couple reasons that I'm not going to get into with this stream. But can you go to like a long-term chart, maybe like a year, 2 years, max weekly, anything like that?
Yeah, just it always looks terrible because of all the SMAs.
Oh, gotcha. So it's so bad. Like I guess we don't even have to, but we can just see that UVXY over like the past however many years basically lost 99% of its value. In the past year alone, UVXY went from $63 down to $15. If we go to the max weekly, when UVXY was created, supposedly it was trading at, is that like 20 24
24
billion?
trillion or something?
I don't
or
even
2
know.
trillion? Like what?
Yeah, like let's say 244 billion or whatever the number is, and now it's at 15. So it goes to show you that the stock falls a ton and it would be a good short candidate. But the problem is kind of like what you said, Tom, is like, yeah, even though you would, like on paper it looks like a good short candidate, it's not realistic because the hedge funds do it all themselves. Like it's hard to borrow. You can't even short this if you wanted to. I've called multiple brokers and asked, and they said, yeah, basically you can't short it, and even if you do find a way to short it, you're going to be charged like 15% interest, which at that point it's like, is it even worth the risk shorting it?
Yeah, exactly. Because that's a pretty big interest. And, like when you're shorting stocks, like obviously you can make quite a bit as they start to fall off. But, it's not like when stocks rise. You know what I mean? They fall off, it seems like not at the same pace that they're moving up, obviously. So it's kind of like a double-edged sword, too, in that sense. But, yeah, I mean, I remember, Mike, back when I don't even want to talk about the old VXX trade I had, but I'm sure you remember that one. I shorted VXX a long time ago, and let's just say it didn't work out the best whenever I first started trading. But yeah, well, I guess that could also prove a point, Mike. It's a little bit unsafe in the fact that like if the market does crash or something too, like these stocks are going to fly up so much that sometimes you might get like margin called or like hit, or you know what I mean, like kind of like get stuck in a really bad spot if they do end up rising at the wrong time, of course. But that's also why it's important to have a very good entry. But like you said, then all the hedge funds are taking up all the shares there whenever it is a good entry time. So
yes,
it's almost impossible anyways. Like Mike said, then you have to pay the interest anyways. So it's just not a good idea. But I definitely see what you mean, Mike. And if that did happen with Twitter, that would be very, very hard to short it. But I see what you mean, though. Like the hedge funds would definitely do that. And like you said, it would be a really good like arbitrage opportunity because it would be really easy for them if Elon, if the deal did go through, and if the deal didn't go through, then Twitter stock will probably crash anyway. So for them, it'd be a win-win situation. Yeah,
and like even if you just think about it in like more simple terms, it's like, why would anyone on earth pay more than $54.20 for Twitter shares if they know that the most Elon's going to pay is $54.20? You know what I mean? It's like, who would pay $60 for a share of Twitter when they're willing to get $54.20? And this is just with the Twitter example, but you could look at it for any acquisition. Like I know Microsoft is buying Activision for, I believe, $95 per share. And it goes to show you, like, no one should pay more than 95. If they do, then it's like sure, you can if you want to, but it's like you're just gonna lose money.
Yeah, this is a really good example to bring up, Mike, because I have a weird feeling that Twitter is gonna kind of start to go flat like Activision is. And the main reason I think this is of course, Mike, I think like retail traders and everybody like that, they might see the hype and they might come in and buy Twitter up at any price. You know what I mean? Like we see people buy some call options that expire the same day and overpay for them. So I'm sure they buy Twitter, above $54. But the thing is that, retail traders don't control the overall flow of Twitter. So I feel like the Twitter is going to end up going flat, kind of like Activision, Mike, as like you said, like all the hedge funds and stuff kind of like limit that buying here, and they'll kind of slow it down. And it's not just hedge funds either. I'm sure that there's tons of algorithms and stuff like that are going to not, for example, like they're not going to be day trading Twitter anymore all day long like they were before. If they were programmed for that, they still could. But, the chance, obviously the market's changed so much that I'm sure that they have to also adapt as well. But it's a crazy scenario, Mike. And there's so many different hypotheticals, but to me, I feel like it's a really good example to compare it to Activision, especially on that daily chart, because I feel like Twitter is going to kind of move like this. Of course, it can go up a little bit, up towards like 54, like we said, but I don't think we're going to see anything too crazy above that, especially since what we've seen with Activision has played out to be pretty truthful too.
Yep, exactly. All right, so good question, Chris. What else? We have Alex saying, is MMM still a good buy at these levels for shares? So, Tom, you follow MMM a lot more than me.
Yeah, I mean, it's really subjective down here. The main thing is like, are you comfortable holding triple M for 3 to 5 years? If you are, I personally think it's a good price point to buy. The thing is though, we are on a bad downtrend and it looks like it's going to continue a little bit lower here in the shorter term. So in my opinion, I don't think I'd buy it right now. If anything, I would wait for the market to maybe start to go back on an uptrend. You know, you might not be able to buy it at 145 if you wait for that uptrend, but at the same time, if you get in at like 150 or something like that, you might have a lot better timing, as in you don't have to hold through a bit of a downturn or anything like that. I just feel like the market is at a crucial point right now. Triple M didn't have the best earnings, and we're about to see a lot of other companies report. And if some of these reports go bad and the overall market falls, I think Triple M has a really good chance to keep falling down as well, at least for the next few months. Now, I think Triple M's a solid company, and I do believe that they will come back over the next 3 to 5 years. It's just that right now they're in a bit of a downtrend. They made a lot of money during COVID. They were making COVID masks and stuff like that. Now they're starting to lose some of that revenue and they're getting back to those COVID levels. So it's definitely not looking good here in the short term, but I think for 3 to 5 years, it'll be good, especially with the dividend they have. But personally, I will wait to buy this one. And I was a buyer of Triple M in the past. I ended up making a little bit on it, but it's just one of those stocks right now I think I'll just wait on, especially with all the growth stocks low. At the same time, I feel like you could get a much higher percentage gain if you bought up like Facebook or DraftKings or Zoom or something like that. I feel like you'll make a lot more money in the future than you will on 3M, although 3M will probably be a little bit safer.
All right. Yeah, that's true. That's true. It'll be less volatile, safer, and at the same time offer a lower return, but that's what you get with the added safety.
Yeah, you do. And they pay a dividend, which is decent. So like I said, it's a really good longer term hold. It's definitely, in my opinion, not something to try to dip by to swing for like a few weeks or anything like that.
All right. We have Keisha saying Roku is even tanking after holding steady over the past couple weeks. Yeah, it definitely is. Lots of stocks are tanking right now. Roku is definitely one of them. Tesla's one of them. Roblox, Chewy, Zoom. Lots of selling pressure today.
Oh, this is rough. They broke below $100 the past couple days. That was a pretty big level for them, Mike. And even if I go to like a 180-day 4-hour chart, you can see they bounced a few times right around $100 too. And I think some people were hoping that they'd end up bouncing here again, but they're continuing lower. They're breaking this support, just like what we've been seeing with a lot of these growth plays. They keep breaking supports and falling lower, and it's very unfortunate. I wonder how long this sell-off is going to continue for, Mike. And I know with rising rates and everything, it's definitely not helping in the short term. So maybe something will change over the next couple months. But man, these sell-offs are getting brutal. And like I said, the way that they're breaking below some supports lately are just, it's crazy to see how accelerated these moves are becoming. But yeah, it sucks to see them down. Every growth stock's down today, so it's not necessarily Roku's fault, but they're leading my watch list to the downside, which shows the acceleration that's been happening. But Mike, Tesla's actually getting pretty close. It's down 8% as well, and man, we're almost down to $900 again.
I was just looking at that. Like, I have it pulled up on a 1-minute chart, and I'm like, dang, when we first looked at it, it was down 5 to 6%. Now it's down around 8%, and it's at that low of day. Tons of volumes flowing in. IVs popping. Let's see some of these put options really quickly. Yeah, like let me do this. Yeah, holy crap. Some of these put options for the weekly chain are up anywhere from like 400% to 700% just today.
Oh my gosh, I'm gonna have to pull one up real quick. Are you looking at June 17th?
No, I'm looking at the weeklies.
Oh, the weekly. Oh, never mind. I was on the old one. Yeah, April 29th. Let's go see here. Yeah, so let's see. I'll just pick like a random put, Mike. I'll pick like a 910 put just to make it simple here. Let's see what it looks like here on the chart intraday. Wow, Mike, this looks like a penny stock. Flew
right?
Up from where was it at the low of day? Like, wow, Mike, Elon's favorite number, $4.20, all the way up to $27.25. I mean, wow, like you said, almost 500% here. That's a big gain there out of these puts.
Dang. And Tom, I'm gonna call it now. Okay, I bet, like, let's say in a world where Tesla stock falls for a couple months, people are gonna start blaming Elon Musk on for buying Twitter that causes the stock to drop. Like nothing to do with the valuation. So calling it now.
Yeah, I bet it'll happen. I wouldn't be too surprised. I know that every time something happens, it seems like they hit Musk really, really hard, which is pretty insane given all the good things Musk has done. He's been good for the environment, number one. Number two, he's been exploring space. I mean, overall, the guy's been making really good advancements. Even the Neuralink thing, which obviously is, more of in the future, but that's going to be big in the medical industry too. And there's all these different things he's doing that seems like it's helping the world. And man, I hate how the media, it seems like every time we get someone who's finally awesome like Elon, the media just destroys him and makes him seem like a monster. But yeah, I know what you're saying, Mike. They're probably going to say it's all his fault and he bought Twitter and that's why Tesla's stock is going down. But man, I really hope that at some point here, Tesla starts evening out. But let's go look at it on the dashboard, because I remember we were kind of eyeing it up last week, Mike, and it was still pretty high. Like even the price to sales is decently high. And as we know, their market cap just under $1 trillion there is pretty telling at how, I guess you could say they're overvalued, but they are growing, but they're definitely not worth $1 trillion in my eyes.
Yeah, same here. Same here. PE ratio of 204 when you're nearly worth $1 trillion. Like it's different if you have a PE ratio of 204 and your market cap's like 50 billion, but it's just in my opinion it doesn't make sense at its current valuation.
Yeah, and you look at somebody like General Motors, which has been around forever. Their market cap's only 56 billion, their PE ratio is 5, and like you pointed out last week, Mike, look at their price to sales, 0.455. Ford's price to sales, same thing actually. So pretty crazy to see Tesla's so high there. Like you said, the PE ratio too is just so telling. Like when you look at these tickers like F with 3.4, and then you go to Tesla and you see 203, it's like, man, like what's going on here? Obviously they're a growth stock and they're still having a lot of volatility, but man, that's pretty crazy.
Yeah, and to be clear, like I don't think Tesla should be trading at the same PE ratio or price to sales ratio as Ford and GM, but I definitely don't think it should be trading at its current PE ratio and price to sales ratio. Like these are way too high. Like you said, Tom, price to sales ratios on Ford and GM are like 0.45 or like 0.45, and then Tesla's it's like 16. It's like that's ridiculous. Like I think it should be nowhere near 16, maybe closer to like 2 or 3, something like that. But we'll see. We'll see. Time will tell. Over the long term, stocks eventually get to their real value. Sometimes it takes them a couple years or so. Like let's check out like even Zoom. Like you guys know I love Zoom, and the stock has been tanking down. And I'll be the first one to say that Zoom was way overvalued back in 2020 when it was trading at $588 a share. Since then, its revenue did nothing but explode up, and the stock just fell down, and that's because it was overvalued. At the time, Zoom had a price-to-sales ratio of, I believe, a high of 112 or 118, something like that, and now it's trading at a price-to-sales ratio of 7.5. So over the long term, all companies will eventually go towards their real value.
Yeah, I mean, you definitely would think so, and it seems impossible. Like sometimes some of these companies, like Netflix, for example, like kind of like this was a really good example, Mike, because Netflix had been flying up on the weekly chart year after year after year after year after year, and it seemed impossible. Like everyone was like, man, they're just so overvalued, but they just keep going and going and going, and like Mike said, eventually it will come back down. And now look, now Netflix is all the way back down to levels we were at the beginning of 2018. That is pretty telling. That's almost 4 years ago. Man, like we're almost back to 2016, 2015 levels if we fall back down to 100. So, man, I mean, that's really telling, Mike. Like you said, it might take, 3 or 5 years before it finally happens. But at some point, whenever there starts to become some selling pressure or some uncertainty in the market, like with rising rates and stuff like that, it caused this big sell-off to become accelerated, and it caused a lot of these companies to come back down to those valuations. And that's a really good point, Mike. You definitely hit it on the head there. It might take a while, but it'll definitely happen eventually.
Yep. Alrighty. Let's see. We have Jerry saying, "What's your standing on current market conditions?" So I'll go first, Tom. I would say the most important two things to be aware of over like the next 2 weeks is one, all the big earnings that we have, but then two, the FOMC rate decision, which will happen on May 4th. Those events will be giant. In my opinion, the biggest telltale sign for the market will be the reaction to the earnings that we have this week from Apple, Amazon, Microsoft, Google, maybe Facebook, companies like that. If they're good, the market should hold up pretty well. If they're bad reactions, that will be terrible for the market, considering how much of an influence these giant companies have directly on the S&P 500. I believe the top like 4 or 5 companies that did not report yet in the S&P 500 have around a 20% weighting on the S&P 500. So that goes to show you that, if we see giant drops out of these companies like Apple, that will just be horrible, like directly to the S&P 500. And then on top of that, if we have an earnings season where everything's tanking down, like let's say all these big companies are tanking down, it's going to make it that much harder for the smaller companies to do the same. Like a lot of times with earnings season, it's either like a very bullish earnings season or a very bearish one. Like, and the last one was very bearish. A lot of stocks just tanked down. So that's going to be very important. Long story short, if these big tech stocks get smashed, I'm expecting the rest of the market to get smashed and vice versa.
And personally, I think that the FOMC is going to be huge. So, like, in my opinion, like with the market right now, I think the earnings definitely are going to play a big role, of course, especially this week and early next week. But I think that FOMC is going to be a big influence as well. And like you said, Mike, the thing that I'm really worried about is if we do see these earnings go bad and it starts to maybe cause a sell-off on the S&P 500, and then whenever we raise rates next week by 100 basis points or whatever they're talking about, who knows what the market could do? Like the SPY is at a very crucial price point right now. We're right around the $420 support. There's also support like around 410 to 415, but it's just such a crucial price point. If we start to break below some of these big supports, in my opinion, I think we could see the market start to sell off in a big way. And in my opinion, I think we're just due for a sell-off. Like we've had such a big bull run here ever since COVID happened with the easy Fed policy. Now the Feds are changing and we're seeing an obvious shift in the market. If we start to break some of these key supports, I think the SPY could possibly run down to 400, maybe even 375 over the next couple months with the way the Feds are raising rates. But, I know that's a big drop out of the SPY. Let's see the percentage from like high to low, what that would make the total downtrend be. Of course, it's not going to fit on my chart. So let's go down here to, let's see, if it ran down to 375, like I said, that would be like a 21%, right around 20% pullback out of the SPY. Personally, I don't think that's too bad considering the SPY has went up from COVID lows to the high up 120%, and from the pre-COVID high to now up 42%. So if we pull back 20%, we'd still be up 20% off the COVID high over the past couple of years. So I think that the SPY is just kind of due to pull back. I just think that there's too many conditions weighing on the market right now that are negative, like the FOMC next week. That's going to be huge. And a lot of these earnings aren't going good either. I was glad to see Tesla report good numbers, Mike, but as we know from today, they're definitely giving those gains right back. So we kind of saw this in last earnings season too, whereas even the stocks that did good gave the gains right back. And I feel like we're going to see that happen here. And it's unfortunate, but I think the Feds kind of did us wrong here, Mike. I don't think they should have waited this long to start to raise rates. And I think they kind of waited too long. Now they have to hit us with this huge 100 point hike. And it's just not good timing with all these sell-offs going on.
Yep. Alrighty. Yeah, tons of selling pressure, Tom. I just keep looking at Tesla and it's brutal. So we'll see. We have Raymond saying, is it a good time to short IBM for a swing trade? Let's see. I would say other stocks are better short candidates, and the main reason for this is because IBM, while it is falling, these value stocks hold up a lot better in times of uncertainty. Like Tommy has a perfect chart pulled up right now. We can see over the past couple of months and even since like November and September of 2021, most stocks got obliterated while IBM not only held its ground, but it's actually uptrending. So in times like in times that we're in right now, IBM will likely continue to hold up better than most stocks. So it can fall more, but if you're looking to capitalize off of weakness in the market, other stocks would likely be a better option, in my opinion.
Yeah, I agree too. I think other stocks will be better, but this will be a pretty safe mover. And, I shouldn't say a safe mover, a slow mover, steady. It'll probably stay within like this range here that it's been in. I don't really see it breaking out, but they did have some big news lately, Mike. I can't remember exactly what happened with that earnings report, but I remember I thought I saw some pretty big news with IBM. I just can't put my finger on it, but who knows? Maybe that could help them over the next few months, maybe start to, maybe break some of these bigger resistances here. But I agree, it's just been trading in a range. It hasn't really been doing too much the past couple of years. Kind of reminds me, Mike, of like Intel. It just kind of been staying steady in between a range. Of course, it's went up a little bit. It's also went down a little bit too, but it's still within that range. And yeah, I would say that's a pretty good comparison to Intel. IBM and Intel are kind of moving slow here. I know HPQ was another one of those like older computer companies, but HPQ is actually doing quite well, believe it or not, compared to IBM.
Yeah. And another thing too is I'm not sure, Raymond, if you're looking at it for, to short it with put options or to short the shares. But when you short shares, you're obligated to pay those dividends. So check this out. IBM, they actually have a decent dividend percentage. So they pay a dividend of around 4.7% annualized. So it's like, it's never good to, like be short shares when you have a decently high dividend.
Yeah, so you'll have to, well, Mike, if they have a dividend, you still have to pay the shorting fees too.
Yeah, so that's another thing. But here's the thing though, you might not have shorting fees on IBM because it's not. Yeah, it's easy to borrow. So for example, like let's say you're trying to short UVXY, you'll have to pay a hard to borrow fee of like 15% or some stupid amount of interest. While with IBM, you might be able to short this one with like little to no interest. So that's the trade-off.
Yeah, well, that's good at least. But yeah, that sucks that you have to have that dividend. But I definitely see what you mean there with being hard to short or like hard to borrow because, man, I know I've seen that in the past where like you said, like with UVXY, it's insane, like 15%. A lot of these other slower moving stocks aren't near as bad. So that's good at least. But yeah, I mean, it's crazy, Mike. I mean, IBM has been flying up here and I will say over the past couple of weeks, it definitely flew up a lot. It looks like it hit off of a resistance. So maybe he's looking to play this resistance back to the downside, but at the same time, just be really careful. It seems like they have some momentum right now, especially in a time where a lot of stocks are down. They're kind of moving up, so it's not too bad.
Yep. All right. And then we have David saying opinion on the metaverse. So I've heard that we're still a couple years down the line before like the metaverse becomes what it's hyped up to be. That's just what I've heard. I have some holdings for the metaverse, like Facebook, Roblox, had a little bit of Matterport, stuff like that. I mean, I plan on holding them for the long term. Besides that, if there's any new developments, like with the metaverse, I would be open to increasing my positions in my holdings or other companies that are, on the brink of really, benefiting off the metaverse. But besides that, I mean, I'm just in these plays for the long term.
Yeah, I feel like right now that they're just going to be longer term plays, like Mike said. You're looking at these stocks like Roblox, Unity, Matterport, Facebook. Hell, even Twitter will probably be a metaverse stock in the future, of course. I mean, yeah. I'm sure it will be. But yeah, all these stocks are probably going to do very well when the metaverse gets implemented. It's just right now, the only implementation we really have of it, Mike, is like Roblox. Like you can go on Roblox and kind of explore their metaverse world if you want to see like what a metaverse could potentially look like. Keep in mind, it might not look exactly like Roblox is set up in the future, but Roblox is definitely giving us a good example of it right now. I know I got on there, Mike, a couple months ago just to see what it was, and it was definitely a very childish game, but it was interesting nonetheless. But it was a little crazy, but you can run around and talk to people and interact and even buy like Nike gear and Louis Vuitton and play basketball and hockey and all this stuff on there. So it was kind of cool, but in the end, we're still a couple years from having it implemented in a big way in society. Mike, like I have old people telling me that they don't like electric cars. Could you imagine me trying to tell them they need to interact in the metaverse? Like, I think their heads would explode.
Yeah. Try explaining an NFT to them, Tom.
Oh man, I have. It's a rough go. They always say, can't I just like take a picture of that and then have it? And I say, well, you technically can, but it's not worth money then.
Yeah, it's like, yeah. You're like, I feel like it's so hard to describe like NFTs to maybe people who are not as I guess you would say who are not very savvy with technology. Like some of the prices people are paying for like Bored Ape NFTs and all that stuff is just mind blowing. Like how about that one NFT? I forgot the name of it, but someone paid like I want to say like $50 million or something. Hold on, let me pull it up. It's like NFT worth $50 million. Hold on, I gotta see this. Let's see. Yeah, $69 million. So it said people sold an NFT for $69 million. Like, try explaining that to like your grandparents, Tom. It's like $69 million for basically something you can screenshot it if you wanted to.
Yeah, that's insane. And I remember the one that sold for that much is just like a whole bunch of random pictures, right?
Yeah, exactly.
Here, I'm going to actually open it up in the tab here so everybody can see it, because you guys got to see how crazy this picture is. It's not even like a piece of art almost. It's just like they took a whole bunch of different NFTs and put them into one NFT, and you can obviously see some stuff like this green guy, or like obviously the NFTs are crazy, Mike. Like you said, there's like weird Bored Ape ones, and even like like Elon Musk styled ones, and all types of stuff. I know DraftKings even did some, Mike, with Tom Brady and stuff. I know you even had one, but it was pretty crazy. You're right. To try to explain this to people is nuts. My dad is actually not even into tech at all. He hardly even knows how to turn on a computer, which is funny. But I tried to explain to him what NFTs were, and it was funny. He goes, so people are making drawings on Microsoft Paint and selling them? He's like, I need to start doing that. It had me laughing, but once I showed him it, he was like, oh man, that looks a little bit more in-depth than I thought.
Yeah. And then Jerry said some guy bought Jack Dorsey's first tweet as an NFT for, I believe, $3 million. He tried to resell it, and the highest offer was $300. I saw this. Like, it just goes to show you how those bubbles work, Tom, because I've been doing a little bit of research like over like the past couple weeks, just to like checking in on the NFT market, and I know that it's been really dumping lately. Like last year it was all the hype, and I'm not trying to say NFTs will be, will never come back, but from my research, a lot of that hype with the NFT markets have been slowing down.
Yeah, they really have, and I know a lot of people that put out NFTs are kind of, they're not getting in trouble, but they're obviously getting hated on quite a bit because, they had, like, for example, some of these rappers, like, I don't know exactly who did them. There was a lot of people at the time, but, they would come out with NFTs and they'd have people paying, $300, $500, sometimes even thousands of dollars for like a special edition NFT or something. And these people are thinking in their heads like, cool, over the next year, I'm going to be able to sell this and double, triple, quadruple my money or something like that. I'm sure that it's a very speculative market, and, they come out there then and they spend $2,000 on an NFT, and then they come back 3 months later and the NFT is going for $200. It's just like, man, like you're right. They've been dumping down, and it's going to cause a lot of controversy. I feel like a lot of people are also saying that it's scams because, Mike, if you're somebody that has any type of following, you could come out with an NFT and just load your pockets up with instant money almost. Like, look at these guys like Kanye West. They make an NFT and they make overnight they make an easy 20 million. It's like, man, how do you do it?
Yeah, it's crazy. Crazy. Speaking of like NFTs, how's like Bitcoin doing? I feel like we haven't checked in on that in a little bit.
Yeah, let me check it out on the futures really quick. I'll pull it up on TradingView actually in a second too. But yeah, look at the futures today. It's kind of hovering around 40K. You look at it on like the 1 year daily chart. I know that we were dipping down a while ago, Mike, around 40 grand. It actually was down to 35, but it looks like it's back on the downtrend here. Kind of seems like Bitcoin's following some of these growth stocks, Mike. And, I'm not saying it's like a growth stock, but it's had similar movement. It's been falling down a lot from highs over the past like 6 or 7 months, and it's starting to consolidate a little bit.
Alrighty. Jerry goes Doge to the moon. Let's go.
We need Elon to get back on Saturday Night Live, Mike. That's what we need.
I've heard that some people are kind of hyping up Doge because, Elon owns Twitter now, and they were speculating that, Elon might do something with Doge and Twitter, but, it's just people on the internet saying, throwing things out there. But, hey, it is moving up.
Yeah, let's check out Doge today. It actually did go up last night. Was that, like you said, was that from the Elon Musk hype?
I would think so.
Yeah, I mean, it looked like it had a pretty good night, actually, believe it or not. I will say, though, Dogecoin on the daily, Mike, is not looking good. It's definitely not looking as good as Bitcoin is as far as holding its levels. But now this one, Mike, really looks like a growth stock, in my opinion. This looks kind of like a setup on like Rivian or Lucid or something like that with the way it's been moving. But it looks like it has been consolidating a lot, Mike. And who knows, maybe if Elon, hey, he owns Twitter now, maybe he can come out and say whatever he wants about Dogecoin, and he can try to make it do whatever. Dogecoin's not really regulated, is it? Like, if he can technically come out and pump it as much as he wants, right?
I don't know. I feel like it's a gray area because I know that, like, obviously when you can't pump stocks, obviously, but yeah. I know that, like, technically cryptos are a thing of their own, but then again, it's like you can't just, like, you can't just operate those types of things.
He'll probably get sued if he did.
So I don't know. It's like a gray area. I've heard mixed things. So we'll see what happens. But Tom, we had a pretty good stream today. Do you have any other last minute thoughts?
Yeah, I guess, why don't we cover these earnings plays really quick here? We're going to have some big ones today, guys. So after hours, we're going to have Microsoft, Google, Visa, General Motors, Enphase, even Chipotle if you're into, E. coli and stuff like that.
My God.
I don't know if you guys remember that a while ago, but man, I remember so many people were getting E. coli from Chipotle. I felt bad for their stock in the short term, Mike, because I hate to say it, but that's just a little bit of a risk that comes with the restaurant. But ooh, that was rough there. But yeah, Enphase tonight's going to be pretty big, Mike. I know this is a stock we've talked about quite a bit. General Motors announced an all-wheel drive electric Corvette lately, so hopefully that helps them with earnings. But Visa, Google, and Microsoft are going to be pretty big tonight, Mike. And, I just want to check out Microsoft really quick because on the daily chart, it looks kind of like the SPY. It's consolidating a lot. It's almost falling back through some of these key supports. So if this earnings play goes south and Google's goes south, who knows where the SPY is going to end up tomorrow, Mike. But definitely keep your eyes on futures tonight, guys. /ES is the ticker on Thinkorswim. So if these futures start tanking down in the middle of the night off bad earnings, definitely expect some selling pressure tomorrow.
Alrighty, well, thank you guys so much for watching today's stream. The market is going crazy, mostly to the downside. Before we close out, I just want to personally thank all of you for joining. So thank you, Raymond, Alex, Tony D, George, Keisha, Hunter, Vicky, Alex L, J Deep, Jerry, Chris, and David, B Square, and Couch Potato. Thank you guys all so much for joining. Like I said, we are set for a lot of volatility, not only for the rest of today, but even for the rest of the week and the week after with the FOMC meeting. So keep that in mind. Besides that, let's have a great day.